Good evening, and welcome to the Crypto Overnighter. I'm Nikodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on Saturday, April 22nd, 2023. Terra co-founder Do Kwon has been indicted in Montenegro. He's been charged with allegedly forging legal documents. His arrest on March 23rd happened while trying to board a private plane in the capital of Montenegro. He's accused of using fake documents while attempting to board that flight to Dubai. Hang Chang-John is Terraform's former chief financial officer. He's facing similar charges. Han was arrested with Kwon back in March. Now, post-indictment, Montenegrin prosecutors have reportedly requested an extension to the detention period for the pair. So we've got Han and Kwon facing charges in Montenegro. Meanwhile, one other Terraform co-founder, Daniel Shin, he's still free in South Korea. Local authorities did attempt to arrest him. They wanted to. They cited unconfirmed allegations of Shin being a flight risk or destroying evidence. But the Seoul Southern District Court denied their request. So the court questioned Shin, and afterward they said that there was little likelihood that Shin would flee or destroy evidence. Lawyers for Do Kwon reportedly argued in court against the allegations put forward by the US SEC. They sued Kwon for allegedly defrauding US investors, allegedly illegally offering unregistered securities. On April 21st, Do Kwon's lawyers asked the judge to dismiss the SEC lawsuit. So they claim that the regulators' accusations are unfounded. While requesting to dismiss the lawsuit, Kwon's lawyers asserted that the U.S. law prohibits regulators from using federal securities law to assert jurisdiction over digital assets in this case. In addition, the lawyers claim that the SEC failed to prove that Kwon had defrauded U.S. investors. And according to them, the stablecoin at issue is a currency. It's not a security. Now, following Kwon's arrest, both South Korean and American authorities really wanted his extradition. Montenegrin Justice Minister Marko Kovac spoke on the subject. He said, quote, "In the case when we receive several extradition requests, I would like to say that determining to which state they will be extradited is based on several factors, like the severity of the committed criminal offense, the location and time where the criminal offense has been committed, the order in which we have received the request for extradition, and several other factors." Now, if you've been enjoying the Crypto Overnighter, please like, follow, and subscribe to the podcast. It really helps us out, so thank you. The European Union finalized its markets in crypto assets legislation on Thursday. And in doing so, they become one of the first major jurisdictions to bring some clarity to supervising the crypto sector. The EU's 27 member states are now set up to comply with the new regulation. And that regulation sets out authorization requirements for crypto service providers and token issuers to be enforced by member states. The MiCA legislation is a comprehensive regulatory framework for digital assets. And as such, it puts the EU ahead of other jurisdictions, including the United States and the United Kingdom alike, at least in terms of crypto regulation. The UK's post-Brexit economic strategy includes provisions to regulate crypto as financial instruments and to regulate stablecoins as payments. Even so, there is no specific timeline for implementing these regulations. And that brings us to our cover story for tonight, because some industry groups believe legislation puts significant pressure on the UK to speed up its own crypto regulations. Crypto UK is a London-based lobbying group. They said MiCA is, quote, an extremely relevant regulatory stack that delivers operational clarity for crypto. The UK's Treasury Economic Secretary, Andrew Griffith, said that the government aims to introduce specific legislation for crypto in the next 12 months. Even so, the UK is already behind the EU in terms of setting rules for the crypto sector. Now, that's a situation that industry lobby groups say could weigh heavily on UK policymakers. To be clear, the UK has looked to MiCA for inspiration. Gwyneth Nurse is the Director General of Financial Services at the Treasury, and she said that there are aspects of MiCA that everybody likes. She said the UK has factored these aspects into their own consultation on crypto rules. That consultation said policymakers were considering an authorization regime similar to that set out by MiCA. And while the EU left themselves a lot of room for some rulemaking around asset-backed stablecoins, the UK is going a different way. They're attempting to regulate them as payments. One difference for MiCA, the UK's crypto proposals leave out areas such as settlement and financial advice. The EU's advantage over the UK when it comes to crypto regulations is the fact that the EU managed to offer some degree of clarity. The UK's approach comes with a period of uncertainty. That's because the rules have yet to fully come out. However, many firms value the UK's staged approach because it builds on existing financial regulation. The UK's strategy lets it be more flexible. Now, the EU may still need to draft a follow-up legislative package dubbed MiCA 2.0. Regardless, the UK will just bring out relevant regulation at the right time. That's according to Riccardo Todaro-Ricci. He's the head of policy and government relations at the London-based Payments Association. And he said that it is unlikely that the UK will speed up its efforts to regulate the crypto sector, at least for now. The Financial Stability Oversight Council, or FSOC, voted unanimously on Friday to bring two new frameworks to public comment. The first offers more transparency into how the council assesses potential risks to financial stability. The other concerns tightening rules for non-bank entities like hedge funds and cryptocurrency firms. Now, this framework also entails risks stemming from activities of those firms. The council voted to issue a framework that would tighten the rules for designating non-bank entities for Federal Reserve supervision. These are companies offering financial services, but they are not registered as banks. Things like hedge funds and cryptocurrency firms and other similar ventures. The proposed rules are intended to help FSOC preserve financial stability in the United States. And as such, they could bring cryptocurrency companies under closer supervision by the Federal Reserve, because we really need a three-way fight between the SEC, the CFTC, and now the Federal Reserve over who gets to administer crypto. But anyway, digital assets have been a hot topic throughout the March banking crisis. Two of the closed banks were noted for being some of the largest such crypto-friendly entities. Speculation centered on whether the collapses were caused by exposure to crypto. There's even question whether the specific banks were targeted as part of a larger assault on the industry. Operation Choke Point 2.0, it's called. Now, one thing, the first of the three banks to fail, Silvergate Bank, died due to its exposure to digital assets, but not because of cryptocurrencies themselves. No, that's due to its ties, and I mean close ties, to FTX. And FTX died from gross incompetence and large-scale fraud. So it's not that crypto failed or killed Silvergate. Greed did that. Now, regulators themselves have come out and denied that digital assets were the cause of the crisis. Most egregiously, Signature Bank was closed not due to exposure to cryptocurrencies. No, it was closed because of a lack of confidence in the management that the watchdogs had. NYDFS's Superintendent Adrian Harris explicitly stated that Signature's crypto clients did not play a role in the downfall, even though the bank had what she called a healthy proportion of crypto customers. Now, Janet Yellen aims to tighten the rules on risk assessment, as well as looking at the rules for non-bank companies. The Treasury Secretary said, quote, "Last month's events show us that our work is not yet done. The authority for emergency interventions is critical, but equally as important is a supervisory and regulatory regime that can help prevent financial disruptions from starting and spreading in the first place." The Silicon Valley Bank collapse sent shockwaves through the tech industry last month. Circle had $3.3 billion in USDC reserves at Silicon Valley Bank. SVB was closed by regulators amid a bank run. After regulators closed Signature Bank, Barney Frank claimed that regulators targeted the bank over its ties to crypto. He's a former congressman who sat on the board at Signature. Regulators dispute his claim. Yellen's existing guidance for non-bank financial institutions issued during the Trump era created, quote, inappropriate hurdles as part of the designation process. She said the process can take 6 years to complete. She said, quote, that is an unrealistic timeline that could prevent the council from acting to address an emerging risk to financial stability before it's too late. Yellen said the council will discuss the proposals. FSOC voting members include Federal Reserve Chair Jerome Powell and SEC Commission Chair Gary Gensler. Senator Elizabeth Warren of Massachusetts cheered the council's new guidance for non-bank financial companies. She said, quote, we saw in the 2008 crisis how financial institutions that aren't banks, including insurance companies, mortgage issuers, and hedge funds, can be big enough and risky enough to crash our whole economy. She continued by saying the Trump administration put us all in danger, that it significantly weakened financial regulators' oversight of these giant corporations. In response, the U.S. government is moving closer to regulating the cryptocurrency market. Slowly, but still moving. Members of the House and the Senate have been working on a bill to create new market structure rules around digital assets. These talks come in the middle of something of a regulatory crackdown by both the CFTC and the SEC. Both the enforcement actions and top-level recommendations for new laws to govern digital assets came from an agenda released by the Biden administration last year. House Financial Services Committee Chair Patrick McHenry and House Agriculture Committee Chair Glenn Thompson are the senior House players in this effort. Thompson authored legislation around spot crypto markets last Congress. His committee has jurisdiction over commodities laws. That's because a number of commodities come from the agriculture industry. Thompson said that his committee was starting from scratch in this effort while working collaboratively with the Financial Services Committee. He also said that they're on the same page. Now, Thompson and McHenry agreed in principle as far as what the new legislation governing crypto markets should look like. Now, McHenry said, quote, we're working from those principles to structure ag and financial services pieces for a securities and commodities regime for a holistic market structure bill. Meanwhile, the Financial Services Committee holds the lion's share of jurisdiction on the topic. They have the power to rewrite securities laws central to crypto market regulation. McHenry is one of the most effective negotiators and vote counters in Congress. He's also considered one of the most knowledgeable members of Congress on financial technology. He was co-author of a landmark equity crowdfunding law passed over 10 years ago. That law was one of the last to amend securities laws to accommodate new technology, which sounds like a similar dynamic going on with conversations around legal tweaks for digital assets. The legislation effort recently picked up momentum when the House Republicans began coordinating with the authors of a high-profile, wide-ranging crypto policy bill, one that didn't survive the last Congress, Senators Cynthia Lummis and Kirsten Gillibrand. These two were expected to reintroduce a new version of their bill at an upcoming industry conference later this month. Instead, they pushed their timetable to coordinate with the House effort. Senator Lummis said, quote, we're going to try to work with them and see if we can find ways to dovetail our concepts. This coordination is mutually beneficial. It may give more weight to legislation going forward. Last Congress, the Lummis-Gillibrand bill was well received by the industry. While that's true, it fell short of picking up momentum in Washington. Currently, McHenry and Thompson enjoy the privileges of chairmanship in a chamber where Republicans can pass legislation on a party line vote. Lummis sits on the Senate Banking Committee. The SBC is a counterpart to the committee McHenry chairs. McHenry said, quote, as we finalize those things, we're going to try to team up with the folks who are most knowledgeable and interested in the Senate. And certainly Senator Gillibrand and Senator Lummis have been deeply engaged on this. Now, to be sure, having Senate allies to introduce legislation on that side of the Capitol will help the effort. But keep in mind, Senate Banking Committee Chair Sherrod Brown of Ohio and the Treasury Department will also play major roles in any bills becoming law. Treasury Secretary Janet Yellen signed off on recommendations for new laws around stablecoins and crypto firms in October. The Treasury Department and McHenry's staff did not always see eye to eye on stablecoin talks last year. That said, on Wednesday, he said the Biden administration was working with him and his staff, at least on stablecoins legislation. Now, for his part, Brown has yet to express much enthusiasm for legislating digital assets. Now, let's talk about how U.S. dominance in financial innovation is linked to national security policy. Anja Manuel is a former Department of State official. They were in a Twitter Spaces discussion with Coinbase CEO Brian Armstrong. They said U.S. ability to enforce sanctions on bad actors like North Korea or Iran is only possible because of its position as one of the biggest global leaders in payments. However, China is catching up, especially in mobile payments. If Chinese payments solutions gain a dominant foothold in the developing world, enforcing sanctions is going to be much harder. Sanctions are enforced through the Office of Foreign Assets Control of the Treasury Department, theoretically. I say that because they don't work when there are financial technology firms available to individuals who are looking for ways around those restrictions. Manuel argues that other countries are getting their act together on regulation, and still the US lags behind. Instead of regulation, we get enforcement actions from the SEC. Coinbase's Twitter Space discussion was part of its Crypto 435 campaign. That campaign is aimed at promoting pro-crypto policies and candidates in the US. And with this move, Armstrong has called for action among pro-crypto US voters. And finally tonight, the Texas House of Representatives approved a bill, as they do. This bill requires crypto exchanges to maintain reserves, quote, in an amount sufficient to fulfill all obligations to customers. Passed on April 20th, the bill introduces amendments to the Texan Finance Code. If passed by the Senate and then signed by the governor, it becomes law by September 1st. Under these amendments, if you're a digital asset provider that serves more than 500 customers in the state of Texas, and if you have at least $10 million of customer funds, then you are restricted from commingling the customer funds with any other type of operational capital. They would need to hold reserves in an amount enough to immediately take care of all possible withdrawals. They'd be expected to create a plan allowing auditors to review the information made available to the customer. If the provider fails to comply with these requirements, the banking department can yank their license. And that's going to do it for us tonight on a really slow Saturday. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, maybe leave a rating or a review. And in the meantime, we'll see you tomorrow night.